Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, as always, Michael Becker.
Hey, Paul.
And also joining us today is James Eng.
Hey, Paul.
Also with Old Capital. So in the podcast, we have two of our friends that are going to give us a little bit of a story behind the story about how they became successful in investing and operating multifamily properties. And so I think you'll really enjoy listening to the podcast today. They tell kind of an interesting story. They started off with a small multifamily property. Now they're on their 8th, 9th, 10th transaction. Just amazing the amount of transactions that they've closed and the amount of work that has been done into these properties. So we're excited to have Raj and Raje in the podcast today. And guys, thanks for coming in. We appreciate your time.
Thank you, Paul.
Thank you, Paul. And thank you, Michael. And thank you, James.
No problem. So I think what we'll do is we're going to kick it over to James and let's kind of visit a little bit more about what you guys do.
Sure. So you guys really had sort of a life before multifamily. So maybe give us some background on what you guys did previously and then what got you initially started in multifamily.
I'm a civil engineer by education. I worked for the city of Dallas for 17 years as an engineer manager. And about 5 years ago, I had an opportunity to invest in a small multifamily investment in DeSoto. It's a 14-unit townhome complex. That's how we started. As of today, we have completed about 12 transactions, and we're holding 6 properties, 600 units on hand, out of which 5 properties are individually owned by me and my wife, and 1 is through syndication with only 3 of my good friends.
Fantastic. Let's talk a little bit more about the backstory, because I think the backstory is an important story because, Raje, you're a dentist.
Yes, Paul.
You're a full-time dentist. Raj, who used to work for the city of Dallas.
That's correct.
He retired at a very tender age.
Yes.
And his backstory is actually a very interesting one. If anybody lives here in the Dallas-Fort Worth area, Raj is famous. And what is Raj famous for? Raj, tell me what you're famous for.
Clyde Warren Park.
So the Clyde Warren Park, he was responsible for putting that together. He was the chief engineer, the guy who put the whole transaction together. Clyde Warren Park, if nobody has been to Dallas or seen it, but that's the park that goes over large expressway. So it's kind of a modern-looking, a large park that's over an expressway in the center of Dallas. Absolutely gorgeous. Took a number of years to put together, but the guy that we're talking to today is the guy who put it together. So as an engineer, he had kind of a checklist mentality because that took from just an idea of somebody's idea, said, let's put a park over a major highway, to actually executing and actually building it, putting trees on it, putting restaurants on it, putting a great large playground and a play area on the park. It was just absolutely gorgeous. And so the guy you're talking to again today is the guy who executed the plan. So, Raj, you really didn't want to get into multifamily. It was really your wife, the dentist, that said, hey, listen, let's talk a little bit about maybe getting to multifamily. So let's kind of go back to that story. Raje, tell me how that happened.
Well, it was really, 6 years ago when we started looking, into the real estate adventure. The way it really happened, of course, we've been working 10 plus years. We had some disposable income and we had a pretty good amount in the IRA, SEP IRA. So then, it was 2008, as everybody knows, the crash. So we did lost quite a bit of money. That's really was the wake-up call. So I thought, we both like, okay, we need to look into some more diversification, different investments. Then we started looking, we started from the franchise businesses, everything, probably an year. We were just researching, investing, everything. Then we said, the real estate probably is one of the best choice. Then the question was, okay, we need an education. We need the mentor. We need to start the right way. Then we kind of, looked into single family, multifamily. I thought multifamily is the best way to go. I mean, we were fortunate, we met Prat Samrak, so he was there, he walked us through, step by step, the first property we took. And again, our focus, in the beginning, when we took the first property, even the second property, we wanted to learn the process of real estate. We were not focused on syndication or anything. We just wanted to learn, how it goes.
Yeah, because you're a doctor, you're a
Yes.
dentist, you're an engineer, you really had no experience in the past.
Correct.
Right.
And so what you wanted to do is have somebody educate you, somebody that was a mentor to you, kind
Yes.
of have them kind of explain
Yes.
some of the pitfalls
Correct.
of what,
That's true.
what it took.
Yeah. To add to that, I mean, Raj, he has a civil engineering background. And again, like Paul was saying, he was involved in multi-million projects, in the city. Only the difference was it was the city's money. Now we wanted to see, how we can bring that knowledge. His, education and also all his managerial skills, we knew he can do a lot more. So that's where really started.
So you talked about 5 of the properties you guys individually own. Maybe talk about that decision versus sort of starting small. I think you've 14 units on your first one, and sort of as you increased in size, you kept it sort of with your own portfolio. Talk about that decision versus maybe buying some of the larger properties and syndicating it.
I think when we started with a 14-unit townhome complex. Then we bought a 60-unit, the second deal. There was no specific formula that we had to do an individual investment. But the first and second, it was not too big, so we were able to put our own equity and close the deal. When the third deal came up and we were short on cash, of course, then we called a couple of our friends who were interested. Since we did the deal 1 and deal 2, they were easy to raise the money, and it was not a rocket science, and they were happy they got in. And then when the second deal was sold, I saw the return, and in a short span of time, in 18 months, how I can double my money. And that's where, and then we had enough equity to buy 2 60-unit property, 60 and 63-unit property. And that was kind of a turning point in our lives. Then we said, if I can do this on a part-time basis, definitely I can do this in a full-time basis. Right. That's how we started and transitioned from but we have that, what you call syndication, one deal syndication. We kind of already sold that first part of it, and we are into the second deal with the same syndication, small team, and we're buying the bigger property. We sold the 50-unit property and exchanged into a 122-unit property now.
What do you see, a lot of transactions you're looking at in terms of acquiring? What are some of the things that you're looking for when you're out there trying to buy your next deal?
Well, I like the value add deals because we do quite a few of them. We did with the recourse loan. So along with the recourse loan, we want to make sure that the properties has some value left in terms of the exterior upgrades required, and in terms of the tenant retool, and in terms of the interior upgrade also. So we look at the property in a different way than what we used to look a few years ago, and thoroughly analyze the property and look at what all the different options we have to not only increasing the rents, any other opportunities such as the laundry contract. Now the property which we're buying next couple of weeks, the laundry contract has expired. And for a small 80-unit property, the laundry income is going to be approximately about $1,200 to $1,400 per month. That translates into between $200,000 to $250,000 gain in the value. So when we saw that opportunity to buy the property, and me and my wife, we said, okay, this is a great opportunity for us. Not only there is rents are low, and all the additional income is not there, we can definitely make this into a better deal. So that's why we're as you guys know, you guys have been helping us. Great, you guys have been helping us, and in next about 10 to 12 days, we're fixing to close the deal.
Yes, so we closed a couple of deals in the first quarter. Maybe take us through, let's say, Casa Bonita. Maybe take us through that property. You bought the property. Tell us what you did on that property, and then, without giving away too many specifics, but maybe tell us sort of where you've taken the value compared to where you bought it to where it is now.
Casa Bonita, we bought the property exactly about 12 months ago. That was on May 14th last year. We purchased the property. The acquisition cost, the total complete cost was $3.85 million. We put about $350,000 into the deal, all in about $4.2 million. And we increased the collection about $15,000 in the first 9 months itself. That translates into about $2.5 to $3 million net gain in the value of the property. And when the property was exactly 1 year now, and that's where it's going to trade in somewhere between $6.5 to $7 million on the market.
Wow, you make it sound so easy. So when did you go and see the property, Rajay? I know
Casa Bonita, you mean?
Casa Bonita, yeah.
Well, yeah, we did look in, I always like to tour the property, before, of course, put my signature. Yes. Yeah, I mean, since 2 years, is where really we are doing full time. So I've been involved more, in all the major decisions. So I try to spend at least 8 to 10 hours a week, to make sure, because a lot of our equity, in the real estate.
I continue to bang the table on having partners, spouses be part of the decision team. You just don't want to have one individual making all the family decisions about what's going on, because these deals can be complicated. There can be some risk that's involved, and you don't want to be the person that gets the call saying that there's a problem, and then you have to transfer that call over to your wife and say, we have a problem. So
Yes.
I want to, I always try to encourage everybody to be on the same team when you're buying multifamily properties. Just not do it as one individual. I want to go even farther back. I remember your first transaction. In fact, I think Michael.
Yeah, he was my lender. Michael was my lender.
So Michael, when he was at Wells Fargo and he wore the lender hat, I remember your little property down in DeSoto. Why did you like that deal?
It's a 1980s property. It's a 1,040 square feet units and 13 units. But the best part was there was a couple of 2-car garage for a 13-unit property and a small office. We never know how somebody built that office and a car garage for a 13-unit property. So I could able to convert that about 1,000 square feet unit to an additional 14th unit property and increase the value of the property by $100,000 in about 8 to 9 months. And then the rents were also very low, $600 an average. We went from $600 to $850 in about 3.5 years. And by doing that, I could able to sell, and our rate of return was about 420%, 424% in actual in about 4 years.
Yeah, let's put real numbers of what that means. And so you bought this property how long ago?
This is about 5 years ago.
About 5 years ago, Michael did a loan on that property.
Yep.
I'm sure he remembers that.
I do. I had to go to DeSoto one day. Yeah, I remember.
We all walked the property, right? It's a small team.
It was a small multifamily, so that was your first step from
That's true.
really owning a single family home to owning a small multifamily property. You spent $400,000, I forget.
That's absolutely true, Paul. I think you remember very well. It was $425,000. That's including the rehab cost.
In the rehab deal, Michael at the time did
Probably
it.
what, 75% loan? I would
Correct. It was a
imagine?
75%, and my investment was $115,000 approximately.
I
Okay.
think it was a recourse loan.
It was recourse loan, of course.
It was a recourse loan, and then probably 5-year term, 20 or 25-year amortization on
Correct.
that deal. That's really not the important part, but what you did is you converted that garage
Correct.
over
That's the biggest one,
to
right.
living space.
Yes.
And then you picked up additional value with that.
Correct.
You're able to push rents up from X up to Y.
Correct.
And that increased value.
Correct.
And then you held on to the property and kind of let the property just stabilize over a period of time.
Absolutely true. Absolutely.
And then, last year, year before you sold
Year
the
and a half
property?
ago, 18 months ago, we sold the property
And sold it for what?
for $840,000.
So not a bad investment.
Absolutely. That's where we started.
So that goes probably back to one of my points, is that better to start small or better to start big? I mean, now you have the perspectives that you started small.
Right.
You're talking to one of your friends here at the table that is possibly looking to get into multifamily. Would you advise them to do smaller first or just go right to the bigger guns? What was easier for you? What's your advice?
I think it makes sense to start a small deal. Maybe number of investors may be less. Instead of 10, 25 people, you can always go with 3 people or 4 people.
Yeah.
And then you can get to know what all the things involved. You may like some of it, you may not like some of it. And that's where the whole thing is. Now, once you're done, you can correct yourself. And, if you're going for a 60-unit property and you need 5 or 6 investors, that's all you need. And then, you can correct yourself within 1 year what all the minor mistakes you did. And then the next one, you can go for a 150-unit deal.
Right.
So it's always a step approach.
So eventually you want to be up to the bigger properties,
Right.
but you don't have a problem with doing a smaller deal if you could do it by yourself.
Correct.
The bigger deal really is the economies of scale. Mike, anything more to add to that?
No, yeah. I mean, generally speaking, I'm sure I can't remember how you managed the 14-unit deal. Did you self-manage?
Correct. I self-manage. One of the things I self-managed was to see what all the things involved in understanding a tenant. And that was the good part of the story, is that, 14 units, you don't need a whole lot of managerial skills. and you don't need a manager. I just had my text number given to them, and they text me if there's an issue. And I had a maintenance guy, standby guy for $300 a month, and he would go if he would take care of the issues, and if any units needs to be turned over, he would go and help us to complete it. So it was a pretty much easier, except once in a while you get a bad tenant who would call you, but otherwise I didn't see any major issues to be.
But now I see on your bio here you have a 120 and 180 unit deal. Those
Correct.
take probably less time, I would imagine, than that 14 unit deal.
Absolutely true. But because now we have the management company, all the 6 properties, I have 600 units, is managed by the same management company. I have one management company, one regional manager, and now we're kind of applying our managerial skills. The biggest one we acquired about 4 weeks ago, 184 unit property in the East Dallas market, typical Class C property. And now we're getting to know what's there and where we go from there.
So what's some of the challenges that you've kind of come as you scaled up? So you started pretty small, 14 unit deal. Now you're doing almost 200 unit deals. What's kind of the difference, and how does that interact differently, or how is it different with the brokers? And I know the environment certainly changed from
That's true. Right.
when you bought the deal 5-6 years ago in DeSoto to today. So maybe kind of talk about some of the scaling things. That's what I think a lot of people get lost on. You go from the first deal to your second deal or your fifth deal.
Right.
Kind of how does the scale change, and how did you interact with that?
The biggest challenge is, when you have a 14 unit property, it's easy to manage and it's a small scale. When you have a bigger one, now you have to think a bigger scale. Then when you have a 184 unit property, the collections are going to be 100,000 plus compared to the very small $10,000 per month. And apart from that, you have to think now what all the capital improvements you require. In a small deal, if you're running short of money, you can always invest some money from your pocket. In a bigger deal, when you have a $8.5 million deal and your rehab is about $650,000, then you have to make sure that everything is covered very well. And that's the fundamental difference between when you have a small property, you can afford to make some minor corrections, but in a bigger deal, you have to make sure that think over everything, list everything what you need, and develop an excellent or a great business plan and implement the business plan as we go further.
How's your interaction with the broker network been between when you started to kind of today, and how's that kind of evolved over time?
I think a lot of times when you do this, the first one was 14 unit, the second one was 60, the third one was 50, fourth one was 60, fifth one was 63. So a lot of brokers still they think that I get the smaller deal. I'm not opposed to the smaller deals as long as there is a good value play component to it. Now we're buying one in contract, a 76 unit property in Garland, and we know that there's some pretty good value left on the deal. And we're going to take advantage of that and close the deal next couple of weeks with the help of James and Paul. And after that, 18 months, we have a game plan for that.
I remember 3 or 4 years ago, I was walking a property with you and you had the binder. Talk to me about the binder. Is that your idea?
Yes, it's my idea. What I do is once I know a property, this is something which I want to persuade to make an offer and go to the contract and continue the process, then I start my binder. And the binder would have all kinds of information. The first, my analysis part. Next is my budget. The third one is what all the capital improvements I'm going to do. And the fourth one is the tax information and the DCAD information, the survey. All the information available in the public records, you can collect it. You can download this information, keep it as a file, because it's always very helpful. Nobody would know a lot of times the information may not be right, how much the taxes they paid for the last year, property taxes. And so easily you can go back and refer that. Once you have all that information, once the contract goes through, keep the contract also. So you just keep on building that binder as big as it will be 2-3 inches thick, but you have all the information. And anytime you need, if you want to go back and see what all the capital improvements you want to do, and you can go back and you have a list of things what you need to do, and you can go back and tally everything, and you can go from that point.
Yeah, in this last acquisition, we were walking the property with the underwriter, and I think every question you had an answer or a document right there for him, which is very rare. So he was very impressed with your ability to have all the documentation, everything ready to go, and meeting him and be able to tell the story.
That's what you're going to get from an engineer.
That's true. That's part of being a civil engineer working for the city, managing the bigger projects. You have to keep all the information on tab, and I brought that culture into the real estate, and it's always very helpful. You know what's going on in the property, right? So
when did you quit your engineering job and move to sort of multifamily full time?
2.5 years ago, exactly 2.5 years ago, when I acquired the last property was a Garland property, 60-unit property. I had about 200 units on my hand. And at the time, I thought I had enough work to do and enough income also to support us. And then, that's where I decided to leave my job. And it's been it's 30 months already, and it's amazing 30 months. And
yeah, tell me about your life after quitting and what do you do now? Like,
now,
that's always a question that.
Well, if I tell you the numbers, in the last 18 months, we have acquired 6 projects and sold 5 properties. That's going from 4 properties and 200 units to 600 units. 6 properties is awesome job, and when you own all of it or most of the equity, it comes with a very high pride. And that's where we work hard to make sure that, we take care of our property, we take care of our tenants, we take care of our staff also very well.
So what do you tell people who say there's no deals out there? We run into people that
work hard. I know. I think we closed, as you know, James and Paul, February we closed a 60-unit deal in Arlington. And in March, we came back and closed the 122-unit property with you guys, your help, in Garland. And then we closed in April 19th, we closed an 84-unit property. And now we're fixing to close next about couple of weeks, a 76-unit property in Garland. So that's awesome. 4 deals in 4 months. It's amazing. Life has been, I couldn't ask for a better life. So
what are you doing with your life? I mean, are you guys traveling and all? I know you guys are headed back to India sometime soon.
Definitely, I can answer that. Even I have scaled back, a little bit on my practice. Mm-hmm. So I'm working 3 to 4 days, depending. And I'm really planning the vacations, otherwise he always has the work.
Yes.
Okay, I say, okay, we're going to put it on the schedule. Like last year, we were able to do like 5 vacations.
Wow.
So I said, okay, we're going to put it on the schedule, you work around.
So what was the best vacation of the 5? Where did you guys go?
I think more than one. Italy was one of my favorite.
Amazing,
I always wanted to visit. So at least, we were able to do 10 days. Italy tour. That
Italy
was
and
great.
Spain. I think it's fascinating. As a civil engineer, it's fascinating for me to see how Italians thought about a master plan 500 years ago. So looking at the city of Rome, and amazing how they can build these structures, construction, the buildings and the palaces and stuff like that 500 years ago, when almost there was no existence in any part of the world.
That's what I like about real estate and multifamily is that even when you're on vacation, these properties are working for you.
That's true.
And the rents come in.
Absolutely true.
And you have good management that oversees the property, and you guys do all the work up front into these properties. But going back to maybe James' question about what kind of market is it? I mean, you guys have been very successful taking all these deals down month after month after month. Is it because you guys go hard on these properties with hard earnest money at the beginning? Do you think that's one of the reasons why they do it?
A good broker's network is one of the fundamentals. One broker bought me 4 deals in the last 16 months. And now it's my turn to give him some of the listing. And I did. I turned back and said, look here, we have I want one of the deals I want to sell. And he talked to a couple of his clients, and within a couple of days, we're in contract. And, it's part of building the team, right? So.
Yeah, Mike, talk a little bit about that, because I think that's important when you buying real estate from folks to actually give them the opportunity to sell it for you.
Right. Yeah, it's a relationship business. So if you don't reciprocate, then you stop getting new inventory.
That's true.
To bid at. Yeah, no, that's good. What Raj was saying earlier about hard work. I mean, that's really it. James' question was, is there any more deals out there? And my answer always is, there's always a deal.
That's
it's
true.
just a matter of how hard you want to work to go get it, and then what leverage points you have in a transaction to some non-monetary things you can leverage, especially if you're active. And as I've said on this podcast many times, it's a completely unfair business. So it's who
That's
you know,
true.
what you know,
Totally
what chips
agree
you can
with
trade.
you.
That's true.
And I'm sure you can experience that too. I mean, I'm sure you've been on the right side and the wrong side of that
Absolutely
transaction.
Absolutely
so
true.
is there any little tips that you can kind of see that made you maybe win a deal that you may or may not have been the highest price, or get the opportunity to see a deal before the next person did? Any sort of like tidbits you can leave kind of with the listeners?
I think understanding what exactly the asset is and what all the things comes with the challenge. And when we underwrite, we try to overlook a lot of things. And one of the things I pay attention is details to how many units it is, how many units are down, and how many units we can bring back to the scale. And then if there's any other type of additional income we can generate, we can do that part. By doing the scaling itself, we can always help to improve the net operating income and thereby improve the value of the property. And the property which we're going to be closing in about 2 weeks, we did not see the late fee. We did not see the laundry income. We did not see the RUBS fee. So there's plenty of opportunities in that sub-market, as we know, because I have a property not too far from there. We know that part. We were successful in about 2 months, increasing the income and the collections of that property. So I modeled that input into the new deal, which is not too far, and then I can see a better results because of that. So we have to take that risk, but it's calculated risk. We know that part it's going to work very well, and we're ready for that next challenge.
And that makes a lot of sense. You're buying assets near other assets that you own,
Correct.
and then the brokers naturally think of you because you own a similar asset
Absolutely.
a mile down the road or whatever.
Absolutely.
And that's part of the whole business. And kind of when we describe it, it's like an exponential business. It's not linear. So the more you do, the more you can scale, the more
That's true.
opportunity is put in front of you.
Right.
So I think that's definitely great. So maybe switch over to when you're selling a deal. Maybe this is another way of kind of giving some advice. What are some of the things when you sold a property that made you choose, besides just price on the deal, that made you choose a potential person that you wanted to sell it to? What are some of the things that people can do to kind of differentiate themselves when you got your seller hat on to make you choose them as a buyer?
Great question, Mike. I think one of the things I do was when I go to the property, and we sold 6 properties in the last about 2.5 years. So one of the things I do is I keep the property clean and neat 365 days, but I pay special attention when the property goes on sale. And when the prospective buyers comes in to walk the property, if the property is kept clean, they give you the highest. It doesn't mean that it's going to translate into a good price, but at least they give you a good reward for you. Hey, you guys keep property. That always translates into a good mentality for thinking. And I take time to go on, which units to be showed. And if I have like 10 units, I tell the manager, let's go and look at this 10 units, and we do not want any surprises. And the 10 units are upgraded. If it's not upgraded, what needs to be done? And pay attention to all the details. If the trees are overgrown, make sure that somebody comes and cuts the tree. If somebody picks up the trash very well, keep it clean. Have the lawn guy come and cut the grass every week. So doing that minor things would improve the appearance of the property, the value. The curb appeal is going to be enormous. When the people come from out of town and when they walk the property, they feel good because they go to 5 properties. Most of the properties, they say, it's deferred maintenance. And when they come to my properties, they look at everything in clip and in. And all of our properties, all the 6 deals, where the first or the second or the third ones, they make offer. And we always try to close as fast as we can.
So if you get multiple offers on your property, how do you differentiate between, let's say, buyer A versus buyer B? Is it besides price?
Well, one of the things is the price, and then the last one, it was not the price because it's a favor I was doing for a broker because he brought me 4 deals in the last year and a half. Now it's my turn to give it back and say thank you. I'm taking $100,000 less, but I want to give it to you because I want you to make the part of the deal. So it's just like a thank you note, and we close the deal. We're fixing to close the deal.
Any sort of parting words for our listeners out there in terms of anything else you want to share? Maybe something that you wish somebody had told you 5 years ago when you were first getting started?
Of course, we always wish, we could have started earlier or maybe even brought more properties. But we are happy where we are. We are truly, honestly, we are blessed, have a great network from mentor to, Paul to everybody. And I'm definitely proud of Raj. He truly, honestly is very passionate about what he does. And he's really living his dream life. So I'm really happy for him.
One of the things when you work full time is when I was working for the city, I have 2 kinds of thinking. Morning from 7 a.m. to 6 p.m. I had to work in the city as manager and so many things going on. As an engineer, cap is different and the city political things are different. When I come home after 6 p.m., then my investment thinking would start. So it's kind of a little bit challenging in the beginning. But once I left my job in the last 30 months, 2.5 years, now everything is just, I get up in the morning, think the numbers, go back to when I go to the bed, I think the numbers. When I get up, that's the easy part for me now onwards because I know the numbers and I know we have done the small deals. We have done 184 unit deal on our own and I can relate very well and where it goes and how it goes.
Imagine if Raji did not push you to go into multifamily. Nothing wrong with being an engineer for the city.
That's true.
I get it. You made a good W-2 salary income.
That's true.
But just that one little
14-unit
building.
Correct.
That was the match that caught the forest on fire.
Correct.
Right.
And then you became passionate on it, and it was a matter of months, maybe a year or 2 before you decided, hey, listen, this could be a career. This could be something that I want to spend more time on. And then you kind of dialed it up and brought your business to the next level, which is great.
That's true. That's true.
Now, is there any kind of words of wisdom, Raji? Do you think a mentor is important?
Mentor is important, education, and, it takes time. It can't happen overnight. Definitely want to invest in education, have a good network, do all the homework, before really just jump in. I think that's the great thing. For us, first 2 properties, we took, first 2 years. After that, 2 more years, we didn't do even any properties. So we took our time.
That's
then
good.
really we took off.
And now, in a typical month, how many properties will you guys look at? Will you look at 5, 6, 10?
More than that. If I'm looking last 6 months, I know that last year when we sold the properties, one in May, then August, September, December, 4 properties we sold. I know that I had to do a lot of 1031 exchanges. So I was busy, almost like 15, 20 deals per month easily on the low side. And one of the things is once you learned, when you do so many deals, you would get better at it. And since I'm an engineer and work hard, and I know the numbers very well. So now it doesn't take a whole lot of time. Whether I know the deals, whether the deal would good for me or not, I know the numbers. So it doesn't take a whole lot of time to analyze a property now onwards and for the last few months. But going after the deal, very specific deal, and kind of balancing between when you sell a property, you get all the equity, it has to sit there in a 1031, and then we had to buy the next property in a specific time. That's the kind of things we do that part.
That's great. Anything else you would like to share before?
I think the only thing I would reiterate would be, as my wife said, education is the key to the success. And the more you understand, the more time you put in, and how the business model works, you understand better, and you can get better at it. In fact,
Yeah, having a good mentor is
absolutely
is absolutely critical in your success. It's a transfer of skills.
We always thank, every 3 months when I update my financials, I thank 2 people. Thank you, God. Thank you, Brad. I always say that part. Because without Brad helping us out, because the first 2 deals are always very critical, how much of support he gave and you guys gave us in the beginning. That's the key to the success, right?
So Raji, any funny stories about owning apartment buildings that people would think would be funny?
I'm not sure whether it's funny, but it's kind of strange. Let's put it this way. We closed the 60-unit property in Fort Worth a year and a half ago. And so all the transaction is complete. Then the next day we have a 10 o'clock schedule to meet with the outgoing staff for the transition to pick up the keys. And, so we go there, and of course the office was closed. The outgoing manager was already on the outside the office, and she just gave the case and said, okay, thank you very much. And she left, and we're fine. So we open the office, we go inside, surprised to see that they ransacked the office. There was nothing inside the office. There was an old computer, 50s or 60s IBM. And then I was talking to my manager. Then I said, let me use the restroom, then we'll think. I go to the restroom, there was no bathroom tissue paper. Then I said, then I had to run to the Walmart, get the tissue paper. The short story is, when the next deal came up, when we're fixing to go and pick up the keys, I always take my tissue paper just to be safe. That is the part.
Well, that's pretty funny. That's a pretty funny story. Anything more, Mike, that we need to add about this?
No, I mean, I just saw Raj and Raje back 5-6 years ago, I guess, when we first met, did that first deal, and kind of today. It's definitely a story of what's possible if you work hard and dedicate yourself and are diligent and methodical about the way you go about it. I mean, it's just a series of steps, and you got to do one before you do the other. And certainly, hopefully, it's inspirational to some other people out there trying to get their first deal done out there, that it is possible to grow and scale. So congratulations to you guys for
Thank
sure.
you. I appreciate it.
Now, if anybody wanted to get a hold of you guys, is there like an email address that somebody could just email and say hello?
Yeah, sure. They can get hold of me at rajguntnur@icloud.com, spelled as RAJGUNTNUR @icloud.com.
One more time. Do that one more time, the email address.
RAJGUNTNUR @icloud.com.
Fantastic. Mike, anything else that's coming up in the Old Capitol
Well,
podcast?
we have a speaker series. That's on what day again?
On June the 7th?
June the 7th at 6:30 at the Grapevine Convention Center. We're going to have Amy Morgan from CBRE Appraisal Group out to talk about adding value. The later innings, I
Yep.
believe, is the topic we're calling it.
Yep.
So, certainly if anyone's interested in that, you can go to oldcapitalpodcast.com and sign up and register for the event there. We had about 150 people or so at the last event. And then also on there, you get our white paper, kind of multifamily financing 101, as well as the sample due diligence checklist there as well.
That's great. Raji?
I guess I would like to add one more thing. Paul's World Capital podcast is one of the best I have heard. So it's really great. Anybody who is starting out, even, doing deals right now, I mean, I always listen to them up to date. So you get to know what's going on in the market. Really, everything you need to know about the real estate.
The best part of she listens to all the podcasts and she makes the notes too, so I can prove that.
That's not true.
I'm glad you listen. My wife doesn't even listen to these. So yeah. You never know who listens.
Raji, thanks. There'll be another $5 in your pocket tonight.
Oh, thank you, everybody.
Thank you, guys.
No, but all seriousness, I think going to the Old Capital Speaker Series is a great event. You get to network with a bunch of people. I think the last one we had Dr. Mark Dotzauer out. We had almost 400 people at it, I believe. So we should, summertime, so maybe not quite be as large this time, but be well north of 100 people there and delivering some good content, but almost even more than the content. It's a great way to get out and network and meet people, because I found through my career no one comes to my office and gives me money. You got to go out and get it. So going to events like that are a great way to meet and network with people.
That's great. So, guys, thanks for coming to the podcast. We do appreciate that. We also appreciate your success, and we're gratified that we were just a little bit part of that success. And we know that James has done a great job, so we appreciate James.
Great.
One more thing, I think we have a save the date too, Paul. I forgot about that. On October 5th, everyone should save the date. James, I don't know if you want to give just a quick little teaser about that as well.
Sure, we'll send out an email here shortly, but October 5th, Thursday, in Addison, we're going to be hosting our first larger multifamily conference. So save the date for that, and you'll see an email shortly.
Awesome.
Yeah, it's going to be an all-day conference. I think you'll really enjoy that. So if you don't live in the Dallas-Fort Worth area, make sure you be able to come to see that, because we'll have, I wouldn't say all the players, but most of the players in the B&C marketplace, in the DFW Texas market, in one location. And so it'd probably be a good time to come to Texas and kind of see what's a little bit about what's going on, and what the success of Texas is all about. So we appreciate that. Raji, thanks for coming in. James,
thank you.
Michael, of course.
Thank you, guys.
This is Paul
Thank you,
Peebles.
guys.
We appreciate it.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.